Welcome, everyone. We are so glad you can join us for our second in a series of webinars that JFL Total Wealth Management is hosting to address the economic impact of the COVID-19 virus. As many of us are in the midst of what is now a month-long mandate to social distance from our extended family, friends, and coworkers, we hope you are maintaining your sanity and have found some time to appreciate some of life's simpler pleasures. Today, JFL wants to break down the provisions featured in the CARES Act, a $2 trillion stimulus package that was passed by Congress on March 27. We will address those benefits available for employees, retirees, individuals, and families, and what you can expect in the coming weeks. When we originally scheduled this webinar, we stated we would also include details about the small business provisions. Due to the complexity and breadth of these options, we feel it necessary to host a completely separate webinar at 3 p.m. this afternoon, specifically focused on small business needs and the CARES Act options. We apologize for any confusion. Please visit www.jfltotalwealth.net/webinar to register for this separate webinar if you haven't already. We will highlight some of the individual provisions that will be talked about right now, so you may not necessarily need to listen to both webinars. We encourage you to send in questions through the question feature on the webinar panel, and we will answer as many as possible. If we run out of time and your specific question is not read during the webinar, we will follow up with you directly to provide an answer. A recording of this video will be posted on the JFL website on the webinar page within the next few days. Without further ado, let's introduce our two financial advisors and certified financial planners, Jeanne Kane and Jerry Lynch.
Hi, everyone. Good afternoon. Thanks for taking the time to join us.
I shaved. My face was so itchy. I couldn't take it anymore. I had to break down and shave. Welcome, everybody. Thank you very much for coming. Again, this thing is a very dynamic program, and it continually changes. I just try to explain how big this thing is. The entire program is $2.3 trillion. Walmart is the largest company in the United States in terms, and actually in the world in terms of revenue. They do $500 billion in sales each year. You're talking about a program that is 5 times the size of Walmart, that is literally going out in 10 days. And it's starting. So the complexities that are involved are rather complex. And I think what's going to happen is a lot of the programs initially aren't going to make sense, and they're going to have to continue to fine tune them or make changes based on what's happening. It has been pretty interesting that over the past week, we've had a nice week in the market, which is terrific. And I'm happy about that. But I do think that it's still going to be volatile for a period of time until the virus gets contained, and then they start working on some solutions for us. So today what I want to do is go through a few things. Number one is I would like to kind of go through some of the updates that are out there so that you have an idea of what you're eligible for and how this applies for you. Number two, talk about the CARES Act for individuals and families, so what you can expect back from this program, and I think it's a pretty good program. And really answering any question you have. And as Gretchen said, if for some reason we can't get to it today, because I want to be sensitive to your time, what we'll do is we'll give you a call back and walk through them one by one. But again, great to see everybody. Well, at least in theory, see you. And I look forward to having our conversations again.
Okay, so Jerry, I'll take it from here just to talk about some of the headlines. The U.S. is still the country with the most people infected with the coronavirus. And as of today, there are over 400,000 U.S. infections. And worldwide, that number has topped 1.4 million. Now, on a positive note, over 320,000 people worldwide have recovered from the coronavirus. And just yesterday, Governor Cuomo said that hospitalization figures, are starting to show that the curve of infection, it's really starting to flatten in New York State. We still have over 80% of the U.S. population under stay-at-home orders. That's almost 300 million people who can't get out and about. We do still have some time to go. We've got April 30th is kind of a date that we're looking at to where the federal government has, extended the social distancing guidelines. And as we get closer to that, we'll see what happens, whether that will be the date we can start opening back up, or if it needs to be extended further. And on March 27th, the U.S. government launched the largest stimulus package ever when it approved the $2 trillion stimulus package for us. And really, that's here to help individuals, families, business owners, really to help everybody during this very difficult time. Jerry?
Yeah, it's interesting is that most of the stuff I see on the news talks about a $2 trillion stimulus program. And it's really 2.3 trillion. And it doesn't sound like it's that big of a difference, and I'm being a little nitpicky. But that 0.3 is $300 billion. It's the equivalent of like almost what Walmart does in sales in a year. And again, my biggest concern on this thing are the logistics. So there was about 130 families in the United States. 90% of them are going to get checks from this. You're talking about checks probably going out to about 110 million families. The logistics behind that are insane. So when you look at the 2.3 trillion, you have to understand like where are we getting the money from? So direct payments of 290 billion are going to individuals. Unemployment benefits at 260 billion. Again, the federal government is supporting a lot of the states in this. There are tax breaks coming up to about 300 billion. Loans, of which part of those are forgivable loans, are $875 billion. The grants are $230 billion, and other spending, miscellaneous, is $325. And the recipients of those households should be getting around $610 billion. Large businesses, about 520. Airlines, which have gotten crushed in this, are getting about 75 billion. Small businesses, 600. States and municipalities, they're getting crushed on this thing, and they're getting some support. FEMA is setting up hospitals all over the place, and they've been actively involved with that. Healthcare providers are getting 185 billion to support them, and there's another 65 billion coming as well too. Now, what you have to understand is that this is the first round that's going out. They're already talking about round 2, round 3. So I'm curious to see how fast this thing can be implemented, just because of the logistics behind this thing is insane, just in terms of getting these checks out. For businesses, one of the loans became available last Friday. Most banks didn't have the ability to actually take the information down. And even right now, the banks that are taking this information are having to go back and forth because they're going to require more after the fact because they didn't have any direction in terms of where they're going to go to. So part of the program, which is pretty interesting, is the unemployment benefits that are available. So one thing that's interesting is I've been self-employed for 24 years, and my frustration is that I always have to pay unemployment insurance for me, and I never qualified before. Under the new rules, even if you're self-employed, you will qualify for unemployment benefits. The week elimination period is going to be covered by the federal government, so there's no waiting period. You have a bonus check of another $600. So in certain situations, some people are going to get more on unemployment than they would by working, and that's going to be up to 4 months. And there's an extension of benefits that provide an extra 13 weeks of unemployment insurance. So there's a lot of money that's basically going out. And I have to say, and I usually don't say this, the Democrats and Republicans, while they did fight a lot to get this thing through, got something through. And there seems to be a commitment to do whatever they need to for the individuals so they have money to pay their rent, to pay their groceries, and do everything that they need to do. So I think that's very important.
Okay, so part of the CARES Act, one of the bigger components is the direct payments to taxpayers. And almost 90% of all Americans will get some form of a direct payment from the government. They're going to use your income after deductions from your 2019 tax return. If you haven't filed yet, they're going to look at your 2018 return. Now, income after deductions, that's another way of saying adjusted gross income. And if you look at your 1040, you can find that number on line 8B as in boy, 8B. Now, the money you receive, it's not considered taxable income, so you won't have to pay taxes on it. So this is basically free money that you're going to get from the government. Now, for our retirees out there, you're also eligible to receive a payment. Now, keep in mind, if your adjusted gross income, that's your income after deductions, if that's greater than the threshold, you could receive less or even be phased out. So one of the big questions that we hear is, when am I going to get my money? This is an incredible effort on the part of the government they're working super hard to get the money out to hundreds of millions of Americans. And according to Steve Mnuchin, he's our Secretary of Treasury, the first stimulus payments will start going out this or next week. Now, while some people will start receiving their money soon, it may take months for others. This really depends upon how much banking information the government has for you. So if you signed up for direct deposit with the IRS, you'll get yours the soonest. If you haven't, it could take much longer to receive a check. Checks are supposed to start being mailed out April 24th. However, they're warning that it could be as late as kind of the end of the summer for some folks to receive their money. The IRS is working on a web-based portal to allow those who haven't shared the banking information yet to do so that they can get their payments even faster. And right now we don't have information from the IRS on how they're handling payments to people, maybe if your bank account closed or if you've moved. As we get that information, we'll definitely make sure we get it out to you. But at this point, they haven't released anything yet. If we look next at kind of a little bit more detail about what the payments are. So individuals will get up to $1,200 and couples up to $2,400. Now keep in mind there are income phase outs. So if you're single, your income after deductions, if that's $75,000 or less, you get the full $1,200. If your income's above $75,000, then the payment will gradually get phased out. The process works the same for married couples. The difference is that the thresholds are higher. To get the full $2,400, your adjusted gross income, or your income after deductions, that needs to be $150,000 or less. If you earn more, again, it gets phased out. If you have children, you may be eligible to receive $500 per child. Now, keep in mind, those children, they need to be under the age of 17 in order to be qualified. There's no limit to the number of children who can qualify. So again, if you've got 4 kids, 16 under, you can get $2,000. Now, if you have children who are a little bit older, say 17 and up, those college age students, it may make sense for them to file their own tax return and not be a dependent on yours, as they may be eligible for their own $1,200 payment.
All right, so right now, many people haven't filed their 2019 tax return simply because a lot of the CPA offices, you can't even get there. And we have till July 15th of this year to file them. So the government's going to base this on a couple of different things. First of all, they're going to take a look, if you haven't filed your 2019 yet, they're going to take a look at your 2018 tax return. If you did file your 2019, they'll look at that. And I would say if your income went down in 2019, you might want to see what you could do to file it as soon as possible. So there's a couple potential options here. And let me see if I can put the pointer out there. Yeah, we got the pointer. Beautiful. All right, so if your income was lower than the threshold in the last year that you filed, either 18 or 19, you're going to get a check automatically. All right? And you get to keep that money no matter what. If your income was lower than the threshold, if your income was higher than the threshold in 2020, you're going to get the check and you get to keep the recovery rebate even though it exceeds income. So if you're in that box, you win. Okay. The other option is that your income was higher in 2018 or 2019. And if that's the case, right now, they're not going to send you one of these rebate checks. If your income does qualify in 2019, then they will give you a recovery rebate in your 2020 tax return. And finally, if your income was greater than the threshold amount in 18 and 19, and it's greater in 2020, you will not qualify for a benefit. So again, with this, I mentioned before, there's probably about 130 million families in the United States. 90% of them are supposed to get checks. So you're probably looking at 110 to 120, somewhere in that range, million families are going to be getting checks. The logistics behind this thing are insane. A tax rebate, the tax relief rebates will be paid before December 21st, 2020. The goal is to get the money out as fast as possible, but it's going to be very difficult to, just because of the size of this project. No credits will be issued to non-resident aliens, dependents, or trusts. So if you're a non-resident alien, you will not get a check from this program.
So one of the provisions within the CARES Act relates to retirement accounts. These are your 401ks, your IRAs, 403Bs, etc. And first thing to kind of understand within this, like, are you eligible or who's eligible? If you, your spouse, or a dependent, if any of you were diagnosed with the coronavirus, you're eligible. Or if you experience adverse consequence as a result of the crisis. So what's an adverse consequence? That's being quarantined, furloughed, laid off, or if you're unable to work due to lack of childcare due to COVID-19. If you meet either of these, you just need to reach out to your plan and say, hey, I'm eligible for this type of benefit. And there won't normally be a lot of the background checking that's done, because under the CARES Act, the government realizes this money needs to get out to people, and it needs to get out quickly. So what's available to you? The CARES Act allows you to take 100% of your retirement plan balance up to $100,000. Now, keep in mind, if you have multiple accounts, say you have an IRA and a 401k, you don't get $100,000 from each. It's the total amount. The maximum would be $100,000. So within this, you have two options or ways if you needed to get money. The first would be taking a loan from your 401k. If you do take a loan, you take it in this year, or the 2020 calendar year, and then the CARES Act, it's going to delay your payment of the loan for up to a year. And from that point, you'll have 5 years to repay it. Your second option would be as an early distribution from your 401k or your IRA. Now, again, the distribution has to happen this year. There are no penalties to take out the money. Normally, if you're under 59 and a half, you'd have to pay a 10% penalty to take the money out. With the CARES Act, this penalty has been waived. Now, there won't be any taxes withheld when you take the money out. You'll still owe them, but the taxes due on the distribution can be paid over a 3-year time period. And keep in mind, you don't have to spread it out over 3 years. If your income is particularly low in 2020, you may not want to do that. You may, because if you paid it this year, you're going to be in a lower tax bracket, you may end up paying less taxes on the money you have to take out. The other benefit is that you can put the money back. If you have the ability to repay your IRA and repay your retirement plan within 3 years of taking this distribution. It gives you the opportunity to make up some financial ground that you may have lost during the time that you were taking it out. Now, Jerry, I think you had another comment in here you wanted to add.
Yeah, there's a couple things. Number one is the number one reason why people take money out of these retirement accounts, either through loan or distribution, is to pay creditors. And I can't stress this enough. 401ks have unlimited creditor protection, meaning if you get sued for $1 million, they can take your house, but they cannot touch your retirement account. It's protected. So if they're going to if any of you are thinking about taking money out of a retirement account in order to pay creditors, let's have a conversation. I don't think that makes sense. I may be able to work out some other options. The second thing is that generally coming out of these types of declines, you see a big spike in the market. In fact, we had talked last time about what's a bear market, and a bear market is a drop of 20% or more from a market high. Technically, we're no longer in a bear market, as strange as that may seem. The market, the S&P 500 year-to-date is down 13.3%. And in the past couple of weeks, since the market low, we've actually seen a pretty good spike. So the thing is, if you take the money out of your retirement account and you're doing something with it, you're going to potentially lose that spike that's coming out at some later point. It's an option, and I think anytime you have a problem, the best thing to do is to sit down and have 3 or 4 different options available to you. This is one of them. A home equity line of credit may be another. There may be some other ones as well too, but at least make sure you have several different options. And then based on the specifics, you can pick and choose what makes the most amount of sense based on that specific problem. I can't stress that enough. So one of the other benefits of the CARES Act is that you don't need to do a minimum distribution out of your IRA this year. If you did do a distribution so far this year, if it was in the past 60 days, you could return it. If it's more than 60 days, as of right now, you can't return it. This applies to IRAs, 401ks, 403Bs, which are usually in not-for-profits, and 457, which are mainly government accounts. It also includes inherited IRAs. So if you inherited an IRA, you don't need to do a distribution this year. And it doesn't apply if you turned 70 and a half last year and you were supposed to do an RMD last year, but you had the option of taking it this year, you still have to take that RMD for 2019 in this year. And another nice program is that anybody with student debt, now again, I don't think this applies really to any of you, but it may apply to your children. The loans payments are canceled from March through September 30th. No interest is going to be accrued over that period of time. So there's no downside of not paying it during that period of time. Involuntary collections have been suspended. And if they are working for a not-for-profit, these suspended months count towards the loan forgiveness program. 2020 spring semester doesn't count in the lifetime subsidized loans and grant program. And if your child does work for a smaller company, one of the things they may want to suggest to their employer is see if instead of paying them a bonus, if there's a bonus on the table, is see if they could pay off part of their student loan. The advantage to the company is they get a full tax deduction on that money. It's not subject to FICA tax, workers' compensation, or any other costs associated with that. The benefit for the employee, your child, is that they don't receive it as taxable income. So it's a win-win if you're working for a smaller company and they have the ability, instead of giving you some kind of cash bonus, to do something like this. I think it's a great program to think about.
So given today's current environment, it is really important to make sure that your estate planning documents are in order. There's 6 kind of very common documents. These are the will, and this is the legal document that gives direction over the distribution of your assets and also that determines who the guardians of your children are. So think of this as who gets your stuff and who can take care of your kids. Revocable living trusts are another. These are trusts that give you the power to control your assets when you're alive and the flexibility to change it over time. They're generally used to avoid probate. They protect the privacy of the trust owner and your beneficiaries, and as well as a way to help minimize any estate taxes out there. Now, for beneficiary designations, this applies for your life insurance policies, your 401ks, and your IRAs. And this is where you designate a particular person or people to get the account or the benefit if you die. And it's really important, with your IRAs with us, we keep on top of this. We review it periodically. One place where we see clients where maybe they haven't looked at it in a while is in the 401ks. So if you can do one thing coming out of this webinar today, maybe take a look at your 401k beneficiaries, make sure they're up to date. Medical directives. This is also known as a living will. This kind of lists your wishes regarding your life-sustaining treatment. So think, I want a feeding tube, or I want you to pull the plug. For the medical release, this is the document that gives healthcare professionals, gives them permission to share your medical information with other people. And the final one is kind of the powers of attorney. Now, these are legal documents that give one person the power to act for another. These can be broad or limited, permanent or situational, and can be for healthcare, finances, or even property. Now, you might be surprised that if you get into a car accident, your spouse does not automatically get to make decisions on your behalf. You need to have these documents in place in order to do so. So there are a couple questions that you need to ask. The first is wanting to understand, are my estate planning documents up to date? We recommend reviewing them and updating them every 4 years or sooner, if there's been a major life change, such as maybe you got married, got divorced, have a new child, etc. Your needs change over time, so it's really important to make sure that your documents keep up with your current needs. And the second question is really, if you have adult children, you want to ask, are my adult children prepared? It doesn't matter what age they are, even if they're just starting out, everyone needs some form of estate documents. At a minimum, they'll need a medical directive, medical release, and powers of attorney. They really need to have someone be able to handle their medical and financial decisions if something happens to them. Now, these documents can be prepared by an estate attorney, and depending upon the circumstances with your adult children, online websites like a LegalZoom or Rocket Lawyer could very easily and very quickly meet their needs. Those are websites you can go on and be at home and very relatively quickly have some estate documents in order.
Yeah, when my 2 boys, I have one who's 20 and one who's 18, when they turned 18, I woke them up before I went to work at 6:30 in the morning, and I said, sign here. And that was medical power of attorney. If you have kids that go to college, one of the things that you know about that is that you do not have access to their grades. And if you don't have access to their grades, you don't have access to their medical records, and you can't authorize it. It doesn't matter if you're the parent. It matters whether or not you have these documents. And this, again, with everything that's happening right now, my advice is contact your kids and say, do you have these things? With power of attorney, and even with medical power of attorney, you only have that power if you have the document. Meaning, if I give my buddy Bob Jones power of attorney for me, and he doesn't have a copy of the document, he's got nothing, okay? So you need to make sure if you're giving somebody that power that they know that that document exists, where that document is, so that they could go out and do what they need to do for you. I think that's really important. Now, with these types of times, I am amazed at the amount of really cool things that people do out there. In Mountain Lakes, where I live, there are signs up all over the place talking about, you know, how proud we are of our medical help, the people that are out there doing everything they do on the front line. You know, there's fundraisers for people that, so they could help buy food for the people that are working in here. Our firm is actually buying several thousand masks, the N95 masks for healthcare providers and first responders, just to make sure that they are safe. There's some amazing things that are out there, but there are also really bad people out there that take advantage of this situation and do whatever they can to rip people off. And you need to be aware of that. Now, first of all, when any time money leaves your account at Schwab, you will receive notification of it. If it's sent to any place other than the address of record, you will get a phone call on it. And if for some reason it looks like something is different, we will give you a phone call saying something seems very strange with your account. Those are always going to be phone calls that we make to you, just because we want to make sure that nothing, if you're getting emails from us on that, there's something wrong. Online purchases, a lot of people that are claiming things on products that they have. Nobody has certain types of medical masks right now. Nobody has cures for these things. And if you're online and they're saying they do, they're lying to you. They're going to take your money and you're not going to get anything worth anything. There's people, I have a buddy of mine whose father just passed away. His name is John Pizzarelli. He is a very famous jazz player. He's got an album with Paul McCartney. He just did an album with James Taylor. His father passed away from corona last week, and his father, Bucky Pizzarelli, is a legend in jazz world. Within 5 days, there was a website set up to do fundraising for the Jazz Association that was supposedly set up by his son, John. John did not set it up. Somebody was setting this thing up, and they were taking this really bad situation and trying to profit off it. So this is the type of stuff that's out there. And the government's never going to email you. They're not going to text you. They're not going to do anything like that. The IRS is not going to phone call you up and say, hey, listen, you have a tax problem. If you see something like that, immediately your antenna should go up. Get a phone number, give us a call. Let's get back on the phone and have a conversation with them. If it's legitimate, fine. They won't have a problem with you calling back. But I want to make sure you're not putting yourself in a position where somebody could take your money. I consider myself your money watchdog, and I'm not going to have anybody take it on my watch. Now, there's also, as a business owner, there's some tremendous things that are out there to help businesses through this situation. One of it is called the PPP Program, which is the Payroll Protection Act. And basically what it does is it will give forgivable loans to employers who keep their employees on for a 5-month period of time. Forgivable loan means that basically they're going to pay half the cost. All you got to do is keep the employees there. There are $10,000 instant disaster loans, and there's a lot of very low interest loans and tax credits that are available for business owners. They're also talking about additional stimulus programs. And I think that's very interesting too, because this virus will go away. At some point, it's going to go away. And the United States needs to get back up on its feet as fast as possible and start earning money, where a lot of people are going to be in a really bad situation after the fact. So I think the fact that both the Democrats and the Republicans are talking about additional stimulus programs is terrific. And we're actually going to have a program for business owners right after this, because I think it's very important that all business owners understand what their options are with this. And Gretchen, some levity, please.
Yes. I know my husband is guilty of this. I guess is a good thing.
Yeah.
So this brings about the end of our general presentation, kind of breaking down some different elements of the CARES Act. We're now going to answer some questions that have been submitted both before the start of the webinar as well as during it. So if you have any additional questions that you'd like addressed, please type them in and we'll try to address as many as we can. The first one that came across was a question, I think wants a clarification about whether or not you can take $100,000 early withdrawal as well as a $100,000 loan from your retirement account.
I'll take that one.
No,
you first.
So you get $100,000 kind of total. So whether you're taking a loan or you're taking money out of the 401k, it's $100,000. And if you're looking at trying to decide, which is a better option for me, should I take a loan? Should I take the 401k? Take a distribution? There's a couple of things to think about. With the loan, you take it out, you do have to start paying it back. You have that 1 year reprieve. But you are going to have to pay it back and pay it back to yourself. And there's going to be some interest over that period of time. With the 401k,
I think there's something with you. You sound like you have a voice box. So maybe I'll respond to that. I think you might have had something with your yeah. So basically the answer is you only get one of them. If you're a husband and wife, you could get one each, but you are limited. Let me get my picture up there. You are limited to the $100,000 per person, whether it's from a loan on your 401. Well, actually, the distribution could be up to 100,000. The loan is a total separate event. If we're using the 100,000 again, an IRA, that could be a distribution. You still can do a loan if you want to. But I would just say again, before you do this, please give us a call. We can walk you through what makes sense. I'm only a fan of doing that if it makes sense, and very rarely does it make sense.
Okay. So last week when we hosted our webinar, someone had asked a question about what happens to someone who is fostering children in their home. Do they receive a check for those children living in their homes, or does it go to the parents of those foster children?
Jeanne, you want to grab that? Let's see, you sound like.
I'm hoping if I sound a little better this time.
No, you don't.
Okay.
All right.
Take that one.
Okay. So generally, this is going to go by what's based on a tax return. Again, a lot of the details with this stuff really isn't out simply because they haven't really addressed it. I mean, again, the premise is that you get a check if you have a child, which is simple. But when you start dealing with foster children, it's usually going to be as who that person as a dependent on their tax return. If they're getting them as a dependent on their tax return, they should be able to qualify for this additional money. And as more information comes out, we'll let you know on that.
And I think that same scenario might apply as well to divorced parents as well, correct?
Correct. It's going to come down to who's taking them as a dependent on their income tax return. That usually deals with the divorce agreement. But I would say here, a planning tip, if for some reason you're divorced, at certain income levels, they're not going to qualify for this. So if you have somebody who's divorced and they're making a tremendous amount of money, and then the other divorced individual is not, I would probably want to have for 2019 that individual files with the kids on the tax return so they get a benefit that year. If the income of the other individual is above that threshold, it makes no sense to do it like that. But again, just okay. we could deal with that on a one-on-one basis.
Okay. There was a question that came in. I know you had mentioned LegalZoom and a Rocket Lawyer as potential online sites that you could get some estate planning documents. Do you recommend that those are used by kind of, I guess, older adults, or is it okay for them to use, or do you recommend actually meeting with an attorney?
Right. Absolutely not. If you use them, I'm going to yell at you. That's the only thing I could say. I don't want any of my clients using LegalZoom type documents simply because your stuff is more sophisticated. LegalZoom is fine for my 18-year-old or 20-year-old kid who just needs something that gives somebody permission to do something. most of the estate planning we do for you is really thought out and detailed, and you're not going to get that on a legal Zoom. You know, I have trusts that are being done that protect the money for the kids over their entire lifetime, that pay money out for their health maintenance support, that will withhold money if they see an issue with, you know, the child in terms of gambling, drugs, alcohol, whatever. You're not going to get that in a legal Zoom type document. You're going to get, I'm dead, here's a check. And that's fine for your kids that are 18 and younger, they don't have anything. But none of you are allowed to do this, or I'm going to yell at you and I'll make you do them again. Sorry, I got so riled up there.
Okay. So one question came in asking about what impact all of this, the stimulus provisions are going to have maybe on the government and the Treasury and taxpayers down the line once we kind of come out of this corona emergency.
Oh, it's not going to be good. Again, I'm seeing like the ripple effect through this thing. So first of all, we're taking, I think we have 22 trillion in national debt. We're just slapping on another 2.3 trillion immediately. We were already running at a deficit of like $1 trillion a year. You know, so we're spending money at a level that is not sustainable over a long period of time. I mean, I don't feel good about that at all. Right now, we're doing what you have to do, and I don't have a problem with spending this money right now because it needs to be done. But we need to take a look at the spending level that we have and the debt level that we have, because a lot of the debt that we have is adjustable debt. As interest rates start to rise, 1 percentage point on, you know, $22 trillion is a lot of money. It's like $220 billion, if my math is correct. So I'm concerned about that. I'm also concerned about the states. I mean, you just think about it. They never planned to have this much unemployment. That's a state-run program. All right, now part of it's being funded by the federal government. That's great, but they don't have the capacity and the money to run these programs. You take a look at a lot of the programs that are going out there right now. People are just spending money like a drunken sailor. And again, I understand you do what you got to do to get through the situation, but I do think long term it's going to create some issues. One of the things I would say to everybody is think about doing Roth IRAs, conversions if you're retired, because that means we take the tax today at some of the lowest rates ever. And that money comes out to us for the rest of our life income tax free. Pretty good benefit in that. And if we don't use it, it could go out to your kids income tax free. You know, so I always say if you're doing it, do it strategically. But yeah, I'm very concerned about this level of spending. You cannot not be concerned about this level of spending. You know, so but again, we got to get through what we got to get through. After this, somebody's got to stand up and say, you know, the emperor's naked. We got to start paying down this debt because it's just getting out of control. So.
Okay. Well, thank you, Jerry and Jeannie, for your feedback on all of these. I think we are going to wrap up at this point. And I realize that this presentation contained a lot of information to digest about the CARES Act. If you're able to, there is the ability to download a copy of this presentation from your screen. If you're not able to, we will be sending out a link of this website and to all registrants, as well as posting a video on the JFL webinar site. So if you have any additional questions, please feel free to reach out to us. We're more than happy to discuss any of these elements with you further. So, and then I would just say stay tuned for some for additional invitations to some future webinars we'll be doing in the next few weeks.
Oh, okay. Jeannie said thank you. She didn't want to have the frog voice. I understand that. Again, I just want to thank every one of you. I appreciate the support you have for myself and our firm. I can't tell you how proud we are to be working with you. And my people are terrific. You know, they're all working from home. Gretchen is doing so much work getting these things organized. There is a tremendous amount of work. And I just keep on saying, can we do more? Can we do another one? Can we do this? Do that? And I'm sorry, I kind of I gave her a little too much, but she's terrific, and so is everybody else here. If you have questions on anything, please feel free to give me a call. Everybody's got my cell phone number. I'm happy to talk to you, Jeannie, whatever. You know, I think that it's going to be volatile for some time until this thing gets settled, but we're going to get through it. And we got through 2000, we got through 2008, we got through 9/11. We're going to get through this. You know, we're going to be talking about it and saying, you remember that time when that virus thing? We're getting through it. Thanks for your time. I appreciate it. If you got questions, please let me know. It's a pleasure to serve you. Thank you very much.
Stay safe, everyone, and have a great holiday weekend.